Welcome to the Business with Beers podcast. This is the place where we help entrepreneurs expand their business, build their wealth, and generate passive income. I'm your host, Brian Beers, an entrepreneur who's on a mission to inspire growth from everyone around me. Remember that you need to take the actions others won't, and you can live the life that others don't. Please be sure to check out my weekly newsletter that now drops every Thursday. It includes one quote, one tweet, one podcast recommendation, plus some business and investing insight from me. It's short and it's sweet. My goal is to provide you with just a couple gold nuggets to help inspire your growth. Go to brianbeers.com to subscribe. Hello, everyone. I am very excited today to bring you Levi Brackman. Levi is the CEO and founder of Invown, a startup marketplace that allows everyday people to invest in all types of real estate. He is also the host of the Invest and Own Real Estate Show. Welcome to the show, Levi.
Thanks for having me. Really appreciate it.
Awesome. Well, to start, can you give us an idea of your journey from maybe about 18 years old or so to kind of where you are today? And then let's dive into your company and go from there.
Wow, I'm 44, so that's a really many years to cover in a very short period of time. When I was 18, I actually where was I? I was in Montreal at the time, studying in something called the yeshiva, which is like a rabbinic. It was actually called the Rabbinic College of Canada, and so the first career move that I had was as a rabbi. So I was actually a rabbi. My first job had my own synagogue in North London at the age of 23. And I did that for a few years, and I got a really deep insight into kind of what that world was. And I liked it, lots of parts of it, which was mainly helping people, getting to know people on kind of a deeper level, inspiring people. But I didn't necessarily like being a congregational rabbi of that type. So I moved to the United States, and there was something I coined at the time called an entrepreneurial rabbi. So I started my own synagogue from scratch in the foothills of the Rockies, right west of Metro Denver, a place called Evergreen. I did that for a whole bunch of years. Along the way, I also started together with that, a nonprofit to help kids kind of figure out their purpose in life, which led me on. I created an online application. We sold into schools. We sold it into youth programs, even a community college, both in the United States and in Australia. But along the way, people kept asking me for data. How can you prove that this works? Show me the data that this is working. Mm-hmm. So that led me to embark on an academic study to try and figure out, does it actually do what we say and we think it's doing? Which led me to a PhD program in psychology, which was heavily on the quantitative side. Okay. So we ended up, collecting a lot of data and analyzing that data and using a lot of statistics. And which led me into a career into data science and machine learning and AI, and I did that for 4 years after that in corporate America, up until 2020 when I left corporate America. So I spent 4 years in corporate America from 2016 to 2020. I left exactly 4 years later. So I started August 2016. I left September 1st, 2020 to start Invown, which is my current main focus. So,
I guess, how'd you get the real estate bug? I mean, what led you to? You didn't mention real estate, so let's talk about that.
Yeah, well, I bought my first house when I was 26, and it was a house in Evergreen, Colorado, and when I was looking to buy a house, which also I could have a synagogue on, there's different ways of doing it. How do you have a house and a synagogue together? And, some people have their basement as their synagogue. If you're starting as an entrepreneur, you do that. And then I showed up at this house and it had a garage, I think it was a 1,300 square foot garage, big oversized RV garage right next to the house. It was detached from the house. And I'm like, wow, this is 2-in-1. This is both a synagogue and a house. And we renovated the synagogue, turned into living space. And I had my synagogue out of there for a number of years. Eventually, when I moved away from there, I realized that this synagogue just is a multifamily house now. Right? So I still own that. That's like a multifamily house. And I realized this is amazing how that cash flow. Actually, first we did Airbnb on that house. We moved out of there. We did Airbnb, short-term rentals, and it was cash flowing like $10,000 a month just from this house. When the mortgage was mortgage, taxes, and insurance was under $2,000. and I just realized like this is incredibly powerful. So since then I've bought, a bunch of other properties as well. And I realized that, real estate is this thing that once you start buying it, you can buy another one. Once you get on the ladder, you can continuously buy it, even if you don't bring on investors. And you cash flow them, and it's a lot of people don't think it's passive, but if you've got good renters and good properties, it's more or less passive income.
Yeah, there's a lot of different levels of passive income, and some can be, if you're the hands-on manager, like it's a job and you're dealing with tenants and unit turns and maintenance calls and fines from the township and all that stuff. And then as you start to hire people and replace yourself, then it becomes more and more passive, to the point of the highest level, right? You're an LP in something and just write a check. So it can fit anybody's kind of criteria based on what they're looking for and how much time they want to put into it. So awesome. So what, in your own words, let's talk about Invown. Why'd you start it? What problem does it solve?
Yeah, so I started it for two main reasons. The first reason why I really started to think about it was because I moved for a job here to Connecticut. I did a corporate move all the way from Colorado to here, and I rented this really nice house here in New Haven, Connecticut. And I had a deal with the landlord that if I wanted to buy it after a number of months, we had a kind of a ballpark figure that I would pay for it. And it turned out that, I wanted to buy it, and I made him an offer. And miraculously, the day after I made him an offer, someone else showed up and was offering $30,000 or $40,000 more than me. And he's like, if you do $1,000 more than this guy, then, I'll give it to you. He wasn't able to show any evidence of this other offer. So that was part of the challenge. But the other part of the challenge was trying to figure out, this was overpaying for this property at the time. And real estate at the time in New Haven had gone nowhere for literally 10 years. So from 2008, when the crash happened, all the way to 2019, which was when I was looking at this house in 2019, real estate basically been flat. It had gradually started coming back, but it was the same prices were in 2008. And I didn't want to overpay for a property, $50,000 more than it was worth. No one knew that 2020 was coming, right? No one knew what was going to happen. So I was looking into how can I do this in a way in which mitigates my risk? And I figured why didn't I bring on investors to invest in this property with me? And then they can kind of get some of the equity and investors and I can kind of mitigate my risk. And I found that there are people who are willing to do that. There's a bunch of companies which will actually buy your equity, but it's not a good deal for the investor. It's a really poor deal for the investor. So I figured there has to be a better way to do this. And it got me to think really deeply about the little guy as it relates to real estate. You have a lot of wealthy people, institutions, and private equity, which makes a lot of money on real estate. Whereas the little guy is kind of carting his money off every month, to pay for his house, either in terms of rent or in terms of mortgage. And mortgages, it might not seem so much, but over the course of 30 years, it's really expensive. Especially if, people are spending 30%, 40% of their income paying interest. So I really got me thinking deeply about this. And I figured if we can solve this problem by creating some kind of more efficient marketplace, peer-to-peer kind of marketplace, rather than private equity to individual, then we could, might be more successful. And that got me down that road. The other part of it, which is really important to me, is I don't come from money, right? My father was a very hardworking guy. He was a scientist. The solution to a threadbare carpet in my home was a rug, not a new carpet. And I knew my father always wanted to get into these kind of deals, but was never able to. He never had the capital, and he wasn't a business person. And I just feel like there needs to be a way in which the average person can get in on deals, right? Like you said, the LP check, right? The average person just doesn't have that. So
it becomes a crowdfunding platform of a sort for real estate investors. Yeah, right.
For anyone. Okay. And I insisted that it's a Reg CF, which means that anyone, you don't have to be accredited. Anyone should be able to invest in these deals.
Okay. So let's first talk about from a real estate operator standpoint. What does that look like for them? What's the minimum they need to raise, and what's the profile of someone who would raise money on this platform?
So it's somebody who's got perhaps they've got a social media presence, they've got a podcast, they've got a following or access to just people out there who would invest in their deals, or has the ability to do marketing to get people to invest in their deals.
Okay.
So it's that kind of person, and would like to then also take harness, I would say, that audience of theirs into their deals, which, 506C or a 506B, for example, those operators who know what that is, wouldn't necessarily lend itself best for, right? Because, a lot of people tell me they've got big followings, maybe they're a best-selling author, maybe they've got, 200,000 people following them on TikTok, and they want to be able to harness that to be able to invest in their deals. It's very hard to do that with a 506C and a 506B. So Reg CF would work perfect for that. Okay. That's the kind of profile of a sponsor we're talking about.
Okay. And so for those who don't know, I'll give my kind of version of it. Maybe you can talk about Reg CF, but 506B and C are parts that allow people to raise things in the IRS or SEC, I guess, that allow them to raise money from private investors. Some of them they can talk about in public. Some of them they can't. They have to have a pre-existing relationship. A lot of those deals have to be accredited, which means you have to have over $200,000 or $300,000 of income or $1 million of net worth. So if you're under $1 million, can't invest in any of these deals. And then I guess the final component is a lot of them have minimums. And this is up to the sponsor, but they have minimums of $50,000, $75,000, $100,000 checks. So you got to be willing to have that capital and willing to put it up. And so that's how a lot of fundraising is done for these big apartment buildings, self-storage, multifamily, all that. So I guess what is it? Reg C, Reg F? What'd you call it?
Reg CF, which stands for crowdfunding, right?
Oh, Reg CF. So how is that different? How does this help circumvent or otherwise, so we don't have to go 5 or 6B, we go Reg CF? How does that work from like a technical standpoint, I guess?
Yeah, so it's exactly as you said. And by the way, that $1 million net worth has to be outside of your private home, right? So you have to have it in assets outside. If you got a really nice house, that won't cut it. That won't make you accredited. So the way this works in terms of Reg CF is that these are all 506C, 506B. They're all part of something called the Jobs Act, which came into effect in 2015, signed in by President Obama, which basically opened up private investments to just, to the public. For real estate, Reg CF, which is crowdfunding, wasn't really as relevant because it used to have a limit of $1 million a year. And $1 million a year is not a lot of money. That limit went up to $5 million, which makes it much more relevant to real estate in March of 2021. Okay. So, and what it really is, it says that anyone can invest in a deal as long as that deal is offered through either a funding portal or a broker-dealer. So the funding portal is like an online portal, and the funding portal has an obligation to vet the sponsor to make sure that they're not going to perpetrate fraud on the general public. Okay. So as long as it's done through a funding portal.
And that's what Invown is, right? So
Invown,
a funding portal.
Legally, we designate it as a funding portal, which means that and if you want to raise money from the public, you can do it through us.
Okay.
So you could do a Reg A. So think about there are people who there's another designation called a Reg A. A Reg A offering allows you to raise from the public, anyone, up to $75 million. But in order to be able to allow to do a Reg A, you have to go through a whole process with the SEC, and it's like a mini IPO, and it costs you $75,000 in legal fees, and there's a lot of documentation. It takes 6 months probably to get it done through the SEC. Reg CF is like a mini Reg A, if you like, right? Okay. What that means is that if you want to raise from the general public, but you don't want to go through the whole Reg A route, and which involves basically also creating your own portal on your own site, etc. It's a pretty involved deal. Then you could do a Reg CF, which again allows you to raise from the general public, like a Reg A does, less amount of money and a much lower burden in terms of the regulatory burden. Okay.
What does it look like? So can you walk us through an example? Let's say I wanted to raise money. We talked about this a little earlier, but we do some hard money lending, right? So we loan to real estate investors who go out and flip properties, bridge loans, all this stuff. Right now it's our own kind of capital, we're close friends, but let's say I wanted to open up, I wanted to raise money from the public and then go out and loan it out and obviously pay investors a piece of it. Yeah, we keep a piece, everybody wins. Can you walk me through I'm a client. What does it cost me to get started? How much percentage do you take? How do you vet me to make sure I'm not going to defraud the public and all that?
So it's interesting because there's a guy who I'm talking to right now who's actually got a hard money lending business and wants to do this because he goes around talking everywhere and people come over to him and says, wow, I can make 8%. They're like, how do I get in it? And then he's like, are you accredited? And they say no. And they're like, oh, I'm sorry. So he's talking to us. He's like, he's got so many people who would love to invest in these hard money loans that he would like to make it available to them. So basically, you would come onto our platform. You would go through the onboarding process, and you'll say list an offering. You'll click on there. I'll take you through the process. As a hard money loan lender, it might be slightly different than for a property. And then we would then look at it and we would see, does this look like the kind of deal which we want to list? Mostly if it's to do with real estate and it's backed by real estate, then yes, we would want to do it. And if you had an LLC already, then you'd have all those documents available. If you didn't, we would help you with the LLC agreement. We would help you with the subscription agreement. We would help you with the Form C. We have templates for all of that. It's all available. So usually we're spending, thousands of dollars with an attorney. That's the other thing. All these documents, they're really form documents, right? People spend a lot of money with attorneys for it. We will help you with all of those documents just as part of the onboarding process, right? And then you'll file your Form C. We'll do a background check on you and a bad actor check to make sure that, you don't have anything out there in the public, which is, we'll also do some, we'll check you out. Like with the guy who's up, we've got a deal up there now. We spoke to his lender to make sure that he's got a lot of mortgages with this one lender. They're all current. He's a good guy. He's paying his debts. And then, you're ready to list. Now, one of the things that we do is we just implemented this, that you would have to have a certain amount of soft commits before you go live. So in other words, you would have to go there, something called Test the Waters. You would have a Test the Water page where people go in and then commit a certain amount of money to it. And then if you have $50,000 worth of soft commits, then you can go live with your deal.
Okay.
And actual money can come in. Yeah.
So what's the minimum someone needs to raise?
So to go live, we would say $50,000. And if that's all you want to raise, that's fine.
Okay. What do you expect to see? Kind of the range is that 50 to under $1 million? Like
I think the average will probably be $1 million. That's what I think will be. We'll end up seeing about $1 million on average. You can raise up to 5.
And can people do funds? So like in a hard money business, it's a fund because we're investing in multiple mortgages, right? Versus like a single property, or does it have to be tied to a specific asset?
So there's a law which says that if it's an investment company based on the Investment Company Act, then you cannot raise using Reg CF. So an investment company is a non-operating company, like a hedge fund would be an investment company. So if what you have is like a hedge fund based on the Investment Company Act, then you would not be able to raise. But a lot of these funds, they call them funds in real estate, they're really operating companies. They're not really funds, right?
Okay.
So as long as it's an operating company and not a fund, in real estate they call them funds when they're really an operating company.
So because we are actually operating the lending business, for example, we're not investing in other people's things. So we are the operators. Okay. Yeah. So that makes sense. Versus you're investing in like third party, have totally no involvement in the management, et cetera. So.
Exactly. Yeah.
Okay.
So like if you're like a syndicator, right, and your whole goal is only to invest in other deals as an LP, you would be an investment company.
Okay. Yep. That makes sense. So then what does it look like from the investor standpoint? So I'm Mr. Joe Brown. I'm on this site and I want to go and invest. What's the minimum I need to do? How do I know? Like, I mean, I can see on the website, I guess, some of the projections, but like, walk me through their side of it. What does it look like?
Yeah, so all the documents which are needed and available to, which you need to kind of vet the deal are all there. The biggest, most important document is the Form C, and that Form C is the document which is put together and is put on the SEC website as well, and that you have access to that on the website. But all the information is up there on the platform to, and you can do all your due diligence and decide what you would like to invest in. So that's basically how it works. And you can then hopefully right now we only have one deal, but we'll have a lot of deals up there, and you'll figure out which deal you want to invest in. and you can basically browse them and decide, what you want to invest in, diversify.
Okay. What's it cost an investor, or what's it cost? Who do you guys make money from?
So there's a 2% kind of commission which you pay on the deal. So if it's $1,000, you'll be paying $20.
Okay.
To as a kind of a commission or a fee, platform fee, if you like, and then it's up to 5% of capital for the sponsor. And I say up to 5% because as your raise size goes up, that percentage goes down, and then we have a deal where you can spend some of that on marketing as well. So,
okay, all right. And what I guess talk to me about now on growing the business itself. Like, what does that look like? What's your plan to grow this business for the next future? Because I know you just launched it very shortly ago, right?
Yeah. It was in the last couple of months we launched it, and one of the things that we've learned very quickly is that it needs to be a full partnership with the sponsor, right? We're not a bank, right? So it's like people come to you for hard money lending. You have the money to give them, right? Mm-hmm. We don't actually hold any money. We're not allowed to. Legally, we're not allowed to hold any money. We're just a facilitator to allow for the fundraising for the general public, right? That's all we are. Yep. So there has to be, we have to be very clear with sponsors that this is not us raising money on your behalf. This is you raising the money, and we facilitate it, right? We make it really easy for you to do that, and from the general public, so you can access general public funds. That's what we are. So I'm looking for those types of sponsors. So in the beginning, I was looking for sponsors who just wanted to raise money. Now I'm looking for sponsors who can raise money, who are looking to raise money and have the ability to tap in to a general public audience to raise that money, and would like to do so. And our marketplace is a very good place to facilitate that.
Okay. Are there some big competitors in the space?
We don't have any big competitors in the space, no. There is one other funding portal which has been around for a while, which does only real estate, but they only do real estate which is going to make social change in a community. So they're called Small Change. You can look them up. They've been doing this for a while, but they'll only accept deals where the deal itself is going to make some kind of social change in the community, whereas we're all kinds of real estate. So there's no real competitor which does all types of real estate and only real estate for Reg CF.
Yep. Yeah, it must be hard. I mean, you're probably experiencing this, but you got to match up the buyers and the sellers, right? So you kind of need to have both. If you just have a whole bunch of properties, but then you have no investors, it's probably hard to get more things. If you have a whole bunch of investors, everyone's looking, but you don't have deals. Like you probably have to kind of in parallel grow both sides of it. Is that true? Yeah,
that's true. It's called the cold start problem. The way we're looking to solve that right now is by getting there are some sponsors out there who have, and we're talking to them. They have a large audience of just regular people.
The influencers kind of on the platform, they bring all their audience to it.
Right?
Yeah. Okay. Yeah. You get a couple of them.
Yeah, there's a bunch of them we're talking to at the moment, and there's two in particular who are gonna list. It's just getting through that process.
And is it less expensive? So why, like, if someone could raise from accredited investors, why would they go on your platform if they're already able to raise from accredited investors? Like, is it to widen their audience? Like, is it less expensive to pay the capital raise fee versus the setting all this stuff up with the attorneys and any other compliance they have to do on their own? Like, what's the benefit if they're already there?
Well, if they already have it and they already have all the capital they need, then they don't need anything. They've got all their investors lined up.
Newer people who don't have. They have a big audience, but they don't have a big audience of maybe accredited investors. There
are people who are not new, but have an audience of non-accredited investors they want to tap into. And there are people who are not new who recognize that they should be tapping into this market of non-accredited investors, because it's an extra $5 million a year of investor money, which they can rely on once they gain that audience. So and then there are people who just, all they want to do is go to private equity people. They just want to help for them that's easy and simple, and then this isn't a good option for them. But and then there are people who ideologically are aligned with the fact that they want to allow just a regular person to get in on real estate deals. There's one guy we're talking to. He was a pastor in churches, and he's got a network of 160 churches across the United States, and they would,
Okay.
There are people who would like to invest in his deals.
So once an investor, so you guys are the marketplace. So once an investor invests with the operator, like you connect the two, but then from there you're done, right? Like they would wire the money to fund the $500 or the $50,000 or whatever they're putting into it to the operator. The operator would send them back ACH, like distributions on a monthly basis, right? What does it look like post raise?
There's actually so during the raise, there's actually an escrow account which is set up.
Okay, so you guys do hold that money.
It's not us. It's an escrow account, third-party escrow account, which is set up on behalf of the investors and the sponsor. And we have a say in when it gets released. Okay, so if there's a closing involved, then we'll have to make sure it gets released in a way in which it's not going just to the back pocket of the sponsor and not to facilitate the closing, etc. So that's our obligation. Once the raise is done, then they're not our investors. We just facilitate it. They are the investors of the sponsor. So we don't take any continued fees. We don't do any more management. It's all now. We do have like agreements with some of the other big investor management portals where we can send them the spreadsheet and this all gets uploaded. So it all shows up in their portal, etc. But we don't manage that post closing.
Okay. So what is, on a personal note, what is your kind of investment philosophy? Kind of where are you investing your money? Is it all yourself? Do you invest with other sponsors? Talk to me about like your personal strategy.
So for real estate, my strategy is not as good as maybe other people would be, because I actually own properties outright. I've actually, so I'm trying to leverage some, I'm going to leverage them now, but I bought them with cash, my own cash, rather than hard money cash. Hard money is expensive, but I do invest in real estate. The vast majority of my portfolio is in real estate. I also have some stocks. I have some startups. I have a little bit of crypto, just a tiny drop though, a smidgen. But I try and invest mostly in things which are going to create value. So fundamentally, my own startup that I can control. So I mostly try and invest in things that I can control, and then I invest in other things which are creating value. And real estate continuously creates value. So that's why I really like real estate.
Awesome.
I don't speculate much.
Yeah, you don't speculate. Great. Yeah, it's especially crypto. I don't know. Is it smidge? Is that what it's worth now, or what it was worth?
No, I bought it when it was worth a lot less. I bought in 2017 Ethereum in 2017, and I just have kept it. So
yep.
It's still a smidge though, because I didn't buy a lot of it, but it's still worth a lot more than what I bought it for.
Yeah, awesome. Do you mind speaking to what is one of the biggest challenges or failures you've had like this far in your life, and kind of what did you learn from it?
Oh yeah, now one of the biggest failures I had was when I was 13 years old. I've had plenty since then, but as a Jewish kid growing up, we had a bar mitzvah. I don't know if you've ever been to bar mitzvah. Yep. And at the bar mitzvah, like the bar mitzvah boy is supposed to, he performs. And, I was a cocky kind of kid, and I thought, I can figure this out. And I never prepared like I should have. And it came to performance day. And it wasn't a pretty sight. I kind of messed it up. And I kind of learned from that always be prepared. It's like, you never know. Often it takes more than you think it'll take, and put the time and effort into it and show up prepared. So that was a very significant failure I had very young, and it was a very public failure. And I also learned, one fails and one learns, and it's not the end of the world, right? You can still go on to be successful. It felt mortifying at the time, but I got over it.
Your parents got over it?
Everyone got over it, yeah.
It's always like I think of that too. It's like what can I learn from this, right? Rather than like focusing on the bad, try to find what's the positive. And maybe it's preparation matters, right? And the more you prepare for something, the more you're going to be able to kind of capture the opportunity versus you try to wing it, and sometimes it works and sometimes it doesn't work. So
often it doesn't.
Proves your odds though. So that's great. What about any sort of important like mentor or coach in your life, and kind of what role they played?
Yeah, I had this guy when I was running a nonprofit. My biggest supporter, my biggest donor was a guy. He was a businessman. He was in the oil and gas space, And he had lots of like really kind of wise sayings. He'd made hundreds of millions of dollars in oil and gas, and was really generous in supporting my nonprofit. One of the things he said to me was, he said that when he went out on his own, he left the oil and gas business and went to start his own business, and he was very, very successful at it. And his calculation was as follows. He's like, what's the worst thing that can happen to me? He says, I get another corporate job. What's the best thing that can happen to me? Like, sky's the limit. I can make hundreds of millions, And he's like, so my downside is almost not, I don't have a downside here. I only have an upside. So he went out on his own, and, he was just incredibly successful in the oil and gas space. And I think, like, people don't realize, like, one's downside is not, going out on your own, taking risks. The downside seems much scarier than it really is. And that's one of the things he taught me. So I've thought about that.
Yeah, because that's kind of what you've kind of experienced yourself, right? I mean, you said you had this corporate data science job, and you've left it to now kind of be an entrepreneur, start to have this startup from the ground up. And is that the same question you kind of told yourself? Is, hey, well, what's the worst that happened? I go back to being a data scientist. The best I always thought that the worst thing that could happen is I go and get another corporate job. As a matter of fact, since I've built up over this time, I've also built up my real estate portfolio, so I don't actually never have to go back to another corporate job. So Invown is going to be hugely successful. I'm focused on that. But even if that doesn't pan out exactly how I think it would, I've built a real estate portfolio. And so once you do that, there's no real, you go to get a corporate, that kind of servitude. You do that kind of servitude when you really need it, to live. But if you don't need it to live, why would one go, and sell one's time 9 to 5 every day and plus? And so I'm not going back to that. Yep. That's great. So what any books you've been reading lately that you recommend in terms of business, investing, real estate, anything that's been good?
I mean, I read a lot of books, as you can see.
Behind you, yeah.
Yeah, and so the books. So one of the books I've been reading recently, and I've started a TikTok channel. I'm talking about this. It's called The Best Within Us, and it's really about this thing called eudaimonia, and which is really it's like this Greek idea from Greek philosophy, and it's as opposed to hedonia. Hedonic lifestyle means living a lifestyle which is just for pleasure, whereas eudaimonia is living a lifestyle which is in line with your deepest virtues, the best within you, right? And Aristotle and Greek philosophers and many others throughout the ages thought that you should really kind of figure out who you are and self-actualize. And I've been reading a book about that, and it's something which I did a PhD in purpose in life, so something which I've obviously spent a lot of time thinking about.
Yeah.
And so I'm reading that book, The Best Within Us, I think it's called. The Best Within Us. Here we go.
Okay.
So I'm reading this book currently. Yeah.
Great. So where can listeners connect if they want to find more about Invown or connect with you? What are the best resources?
Invown.com, INVOWN, made up of 2 words, invest and own, Invown.com. I'm Levi, Levi at Invown.com. And my name is actually pronounced Levi, which is my parents, like they put on the passport as Levi, but then they said, but it's pronounced Levi. So, but that's what it is. It's like the Ashkenazic Jewish version of Levi. But it's my email is Levi at Invown.com. I'd love to talk about this stuff. If I can help you raise money for real estate while helping just the average person getting into a good real estate deal. That's what I want to do.
Yeah, that's awesome. Well, I appreciate you coming on and talking all about it. And I learned a ton. And like I said, thank you. It's been awesome.
Thank you, Brian. Appreciate it.
All right. That's all we got for this episode with the Business with Beers podcast. One thing that would really help both us and other new potential listeners is to rate the show and leave a comment in iTunes, Stitcher, wherever you listen. Also, make sure to link up with me on your preferred social media platforms, LinkedIn, Instagram, Twitter, Facebook. You can find all my links at brianbeers.com. Please just share the podcast with anyone who you think might enjoy it. And until next time, remember to take the actions others won't, to live the life that others don't.